Hello, I'm Hilton Supra, the Vice Chairman of Student Group. I'm pleased to conduct this interview with Gaurav Singh of JPIN, a startup investment banking platform, where we interview people who are changing the world, people that are inspiring us with their achievements, creativity, acumen with the use of technology. In previous interviews, Dinesh Gwada and I have interviewed over 200 amazing people and achieved more than 10 million views on YouTube as a result. This interview series on Citiesabc is in partnership with our platforms openbusinesscouncil.org and fashionabc.org, all 4 IR-based platforms utilizing technologies that employ the use of truth and trust through blockchain and the deployment of data analytics, AI, and machine learning. Today, I'd like to introduce you to Gaurav Singh, one of the founders of JPIN. Gaurav is a founder of a startup investment platform who's a versatile leader in terms of mentoring over decades and scaling companies over a wide array of sectors, including education, consumer tech, aviation, manufacturing, energy, leisure, and healthcare. Now, he's based in London, and he has a master's degree in international business from Robert Gordon University up in Scotland. He's a business strategist and having extensive experience in serving businesses. Throughout his career, he's scaled up many companies and advised many Fortune 500 companies like Thomson Reuters, 9 Unicorns, Global Fund, and Refinitv. He has managed financial intelligence ecosystems valuing over $1 billion. He's also a recipient of various corporate awards and recently awarded the ESG Impact Award in 2022 for empowerment of rural communities by the Confederation of Empower Incentives, the CEI. One interesting thing about Gaurav is he's a spiritual individual and dedicates every weekend to teaching and mentoring students on entrepreneurship, which focuses on women's education, empowerment, and rural uplift. So, Gaurav, welcome, and thank you very much for the opportunity of speaking to you.
Thank you, Hilton. It's a pleasure to be here.
I'm looking very much forward to speaking with you, and particularly learning a little bit about who is Gaurav, who is the man that's achieved such great things and is on a path to achieve additional greatness. Tell us a little bit about your youth. You're now sitting in London. Obviously, you have built this trade corridor between India and the UK. Tell us a little bit more about where you were born and where you were educated.
Yes, certainly. So I was born, so I come from India, northern part of India. I was born in Amritsar, which is the city of the Golden Temple, right? So amongst the most spiritual places. And then, but otherwise, a Chandigarh boy. Chandigarh was recently awarded the second most beautiful city after Singapore by UNESCO. So, really, it's what I call the Beverly Hills of India. But again, coming from a very modest background, and we continue to maintain modest roots. Father's a doctor, and he's dedicated his life to diabetes reversal. Especially and helped people of all the richest families, but mostly focuses on people who can't afford. And his vision is so currently our family foundation is all our own capital, so pretty much everything we make goes to the foundation. The intention is to currently we take care of about around 10 to 15,000 people. His vision is to eliminate diabetes for around 5 million people and bring smiles. And this is elimination and not. So, the culture, so family has generally been very giving and learned the good ethos in life, what really matters and, where you head to. Then eventually, did my master's in bachelor's in engineering in computers. Tried my hand at software development, did well, but wasn't one for, there was always an outgoing personality and, good at social, good at a lot of friends, building relationships. And it was all about, friends that you have since childhood and wherever you touch, they're still there with me. So, that is something when you look back and you think, well, something was working out right. Came to, so did, I don't know how, but I got, there's someone who passed away. He was my early mentor. And he helped me learn from some of the 1% families of the world. These families who've been around for 2, 3, 4, 500 years, right? And the learnings, he was a messenger from God, I think, who was there to just guide us, right, at a very early stage. And essentially, the things that I learned, which have shaped my mind further, is, so there is positive energy and there is negative energy, and this is the perception of how the 1% of the world runs the world, how they see things. We are designed to see things in a very one-dimensional view, black and white, but it's not that. There were 9, 10 different layers of how things are to be seen, right? So, and so one thing was very fundamental that I learned from all these large families. Our negative energy is just not worth anything in your life, irrespective of how much profit or merit it brings. Always surround yourself by good people, good energy. Because if you see, if this is you, negative energy and the negative money is always a layer on top of you, trying to tame or domesticate you. You are not meant to be controlled. You're meant to be yourself. Positive energy will always be someone who supports you and pushes you up, right? That is a simple fundament. Good people will always pull you up, right? So for that reason, it is very, very essential that we do that. Second, a positive energy is all about making sure positive energy introduces other positive energy. Yeah. So unless it is 1 degree of separation, yeah, though it's not worth it. Yeah, because 1 degree of separation allows you to, it doesn't take you 2, 3 years to be able to break the ice. Yeah. There is immediate trust, because see, in this world of wealth creation, I'll just say it as it is, and this is the fundamental of spiritual economics. In the world of wealth creation, trust does not exist. The reason we have very long, lengthy contracts trying to pin down every single line and word and scenario is because people don't trust each other anymore.
Yes.
Yeah? And I think, and trust me, contracts are immaterial. When someone has to do something, they will do something. The lowest chance of something happening is when good, trusted people have introduced other trusted people. And that has been the ethos. That is what we've learned. And as a result, when you do this, you don't end up building businesses to exit. You end up building businesses that lead to dynasties and legacies for a long time to come, because everyone gets pulled toward good positive energy. And that is the intangible where people often miss out. But we've learned that kind of a message. It's the universe is all positive. Universe is not a negative. It's positive energy. And it just gravitates towards good positive ecosystems. So that has been a very early ethos, and that is how JPIN was started. There were a lot of people who, in the UK, UK is second home to Indians. If I just talk about UK, India for a moment. And what people don't appreciate is 60% of wealth sitting in the UK. UK is the biggest distribution of capital in the world. 60% of wealth sitting in the UK is actually 3 generations of Indian money. Right?
Yes.
And but imagine, you might often hear people who've invested in emerging markets and say, oh, listen, I got burned, or I'm not sure. But trust me, the amount of people who've been burned here, yeah, and it's under the disguise of multi-generational, foundational setting up. People can't touch their money, right? And that's gone.
Yes.
Yeah. So that is how we got approached by people who burned themselves, but they definitely wanted to invest actively in the UK. So it's through 1 degree of separation and trust, people approached us, and we've helped and guided people, and that has led to other people. And now, JPIN has around 2,000 plus family offices as part of the trust ecosystem. We have on our cap table, these are people who have invested in JPIN, not in our opportunities, in JPIN itself. Some of the top 25 names in the world top 10 families of India, top many families from the India space and other spaces. So it's just a positive ecosystem, and that has been the life journey. And this is something that we bring to the businesses that we want to back, to the global giants.
Sorry, I just want to sort of get back in terms, you're talking a lot about JPIN. It'd be nice to understand I think it's over 10 years that you've been.
12 years, absolutely, yes, 2010.
12 years now. JPIN, does it stand for anything?
So again, I think there were different means. We were sitting outside JP Morgan. Right? We were walking past. Yeah. And I don't know, I think it's just, that we felt, and IN is for India. Yeah. And coincidentally, we weren't creative in many ways. J also stands for JNP are initials of Nayan and better halves, right? So there's so many different factors, right, that generally came into play. But it just is a word that clicked, for us, and we just went on with it.
But it's very interesting in terms of JPIN. You've got, your co-founder is Nayan Gala.
Yes.
Obviously, you probably went to school with him.
Yeah, and that's where I think so. 2005 is when I went to study in Scotland, Aberdeen Business School.
Yes.
So Nayan and I, we had different courses, but similar modules. We were the top 2 students of the business school. Both had the entrepreneur, never in the immediate circle, but we had a Venn diagram overlap, essentially. And we just said that, whenever we are looking to take our entrepreneurial jump, let's just give each other the first call. And this is 2005. I think we tried a venture. The initial venture was real estate. Didn't go well, but Nayan invested in that. And this is a story that he tells very beautifully. So I didn't know that, but the venture didn't go well. But what we did was, we sold off some family assets to repay people, because real estate has not been my family's strength, or we've never done it. But integrity and honor is what we're all about. So we did that, and Nayan, coming from a real estate background, felt that it was very rare for someone to see a real estate deal gone bad, and them stepping up to make sure no one has lost their money.
Yes.
And that to him, what he says is built that confidence that this guy is of good intent. And I think that's 2010 is when I was in London, and I told him, listen, I think it's time. And Lehman Brothers, the day it went down, I was actually looking to join Lehman that day.
Which desk was that?
Yeah, so on the compliance side, in London, and so seeing a bit of the stuff that was happening that day, it was horrific, and I think it was meant to happen, that day. And I think it was that what I realized, and I mentioned to Nayan, I see this. You have a sword dangling over you, right? If you're an entrepreneur, you're more in control in terms of navigating it better, rather than being a number that gets colored. So that is when we said, let's, I think it's time, come down to London. He was in Scotland. And let's just, do something, and we'll see how it goes. And he took that punt. He came down to London. There was trust. And I think, we are here because of the leap of faith we both took.
So, I mean, from the beginning, your approach in terms of this spiritual approach to investment, it's very ESG driven and resilience driven. It's non-theological approach. I presume from a Sikh perspective, it's non-theological. It's an ethos. It's an approach.
Yeah.
You started communicating what you were doing and your approach, and you built an advisory board of very interesting people like Vijay Goel, Subhash Thakra, Chris Lowe, Mark Brownridge, Parul Jain, Nina Amin, Deepak Kathwal, and Rajesh Dash. And then, and not to forget, Chris Smith. When did they all come on board, and how did that approach? What is your approach in bringing them on board as advisors to JPIN?
Certainly. So they came on. So a quick step back on that.
Yeah.
And, we've been helping families for a long time with advisory growth strategy. And in about 2015, we realized that we don't know much about the startup space. So there was, I'll be honest, there was a degree of FOMO, fear of missing out, personally me. So made a lot of investments that year. And there was a time of ICOs and others. 35 investments, and lost 100% of the money in that year. Yeah, but that was the best blessing. It was a flirty pool of money I was happy to lose. That set the inception for us to focus. We learned how not to lose money. And I will just say it, I think in the maybe Indian DNA, money is not, you don't have money to lose, right? Not a typical VC will just invest, right? So your own capital. So learned how not to do things. And then we started backing people who wanted to do stuff between UK and India, but just didn't know. So we were the first VC, first angel investors to back and give them a view of how to navigate UK India as an ecosystem. So over a course of time, I did that for UK Romania, then Euro India. Generally, Nayan just recently got an award for Euro India 40 for all the work done over the last 7 years as well. And over a course of time, all the people that you've mentioned, or people who introduced them, they saw the activity, the integrity, the vision, what we are pushing. And somewhere, I think that positive energy just is honest, right? You can't fake it. 2019 is when we started to formalize our UK startup entity. And that is where we started to look for people, as I said, who are positive energy, true positive energy, but who are far better than us. Because only people who are far better than us can, positively pull us up. Act as helium, right? And they'll only... So and it's only again through 1 degree of separation. See, and you have to understand these are all the names, and there's so many more who will not even take a picture with you, right? They are very sensitive in terms of who they are seeing with as well. So for them to put their name behind us, put their capital into our business, the intention was, and one thing that I'll tell you how and why we got them on board. It was not for want of capital. But one thing that I've realized, Hilton, is that when I get up in the morning, I think of family, I think of my investments, and I think of people who have invested in me. Everything else is a best effort basis. Partnerships, you want to try and do, but listen, these things will consume your bandwidth because you're accountable. Now, one thing that we learned again from that 1% was, if this is what we're thinking, how do we make sure that when people who are very important to us, how do they think about us every month? Right? When they have invested into us, when someone has put even a penny in you, trust me, you are above all the other initiatives which are best effort basis. And that is something that we started to nurture. And then people loved the vision, because for us, the vision is to build the world's most trusted startup investment bank, trust being the center word. And there are sort of billions of transactions happening, but emerging markets is where the growth is going to come. But emerging markets struggle with trust. So every single person that we requested to join, and is here, is because they see the grand vision, but they see the trust, but they see the ethos of spiritual economics. It's a term that we've just come up with now, right? But essentially, that ethos is what people really loved, and that is what we're bringing. And trust me, there's enough. People don't need each other to make money, but people need good people around to make crazy wealth. You can only make crazy wealth with good people. And that is missing. So that has been the ethos of our ecology. And amazing people have introduced other amazing people who are pretty much everyone is way out of our league. But we are blessed by their love and their positive energy, because we bring something which everyone is missing, right, around them. And it's a collective, collective of the right people who
Yes.
will help each other. This is how billions and billions will be made.
So how did the platform of JPIN obviously started as obviously a network?
Yeah.
And then how did you formalize it in India, and how did you formalize it in the UK? What sort of structure did you put in place for your platform?
So we've UK India again was our first cookie cutter model, because half the life is spent in India and a half here. So we understand the ecosystem really well. There isn't anyone, I will say, to this grand scale who between UK and India has a good grip on both sides. So we have a huge ecosystem that we built over the last decade in India. And so that ecosystem of investment is there. And we have a huge ecosystem in the UK. So we have set up structures in India. We backed some ecosystem which are early stage, and we backed quite a few of them with good capital into India. And same in the UK. And so because for us, we didn't want to jump into a long-term marriage unless we have seen people over a couple of years, right? And the best thing about between UK and India, it has naturally worked in our favor. Is in India you will find there are a lot of ecosystems, right, who are focusing startups, and they unfortunately end up competing with each other.
Yes.
But JPIN's approach always has been a collective and not a competition. Yeah. Now in the UK, and UK, as I mentioned, is one of the biggest distribution points in India. But there aren't many people who are within that family office ecosystem. See, the family offices here have been hurt, and they are very opposite to maybe an American or in an Indian family office, because even if they made an investment, they will not make them public. It has been hurt a lot, right? So it's always very discreet, always in state of denial that no, not my investment, or very underplaying what they've done. And it only opens up to people who the industry has seen for a long time that they are what they say they are. So for India is going through a huge boom. And the last decade, a lot of entrepreneurs, fund managers, ecosystem players have tried to, from India, try to access, come here, visit people, and then do that. But they've only been able to, unfortunately, do transactions, but not have a good flow of capital. And for us, the best scenario is that because we work across every ecosystem player, we have great relationship with everyone, and we are the only guys here between UK and India. So much so that we recently won the UK India Investor Bridge Award from the British government as well, to create the first ever UK India investor bridge. Outside of China and US, India and UK, in no particular order, have both delivered 100 unicorns. But there is literally no investor bridge outside of thought leadership forums, and people struggle to navigate it.
Yes.
Now, to answer your question in another way, the tender was open and we participated. And I think we were possibly the youngest in our energy. But we were the only guys, possibly, I think, who were able to demonstrate what we have done and not what we will do. You see? And I think it's that kind of a ground learning, the number of shoes and the soles that I've, the shoes that I've discarded because of the effort that has put in.
Yes.
That is what talks about. So we have different structures. We just launched a 20 million fund focusing on SMEs in India. We have SMEs as a huge growth sector. And these are those businesses. So if you imagine that, typical investors in the UK, many are still not startup investors, which is why there is SEIs, all these investment schemes. People still love a bit of touch and feel. Good businesses which have cash flows rather than zero, right? So that fund is created for that. Then, we previously helped create one of the largest funds in India on the startup early stage investments. We are now just launched a 130 million fund, which will focus on emerging markets,
Yes.
based out of Jersey. And that will be a pre-series A onwards investment. We have ourselves made, numerous startup investments and guided businesses, right? So it has been a journey which is mixed. We've got people, investors, we create SPVs where, investors can come together and participate in those opportunities. But typically these are investors, many of them who will usually come at a much later stage, but we are trying to bring them in early into businesses so they can guide them the right way so that they can consume the large capital that these guys will put in, right? So it's been, a bit of a journey of how we've built the UK-India corridor for months.
And what's the communication channels that you have with your investors? I mean, is there, do you have regular meetings, group meetings, and then you introduce the startups to them? Is that the standard format?
It's a combination. Again, I think so. We try different approaches. We whatever works for that venture, because agility. We've done a lot of pitch days. Earlier we used to do in person, then we started shifting to Zoom, and we get a huge turnaround. We do one-to-one family office conversations. Then we host family office events where we just once a month, for instance, in the UK, in Mumbai, in Delhi, in different places. And again, these are typically only people who have been with JPN for a while, and then people who are from their network, right? Because all we are trying to do is spread trust. Based on the size of the deal, someone looking to raise 500,000 to someone looking to raise 200 million, the approach varies.
Yes.
Our intention is to get people to participate in a more longer term journey with the venture. And not because most of these, early stage investors typically get, after a couple of rounds, get, they are looked at upon as a long tail we have to get rid of, right? But that is when the true jump will come. And because we bring in, pre-series A, series B, series C, D, E, going up to IPO from our own network. It's easier for us to be able to give investors a much more longer curve returns. Generally, approach varies.
I mean, the approach for an investor is obviously seed capital or startup capital, but they have to be in the long journey because they have to preserve their investment by following up on the following rounds, so they minimize their dilution.
Yes.
That's very, very important to explain to these type of investors. Yes. It's not one shot for a moonshot.
Yeah. And see, again, I think I will still say that, it's a yes or a no. I think the larger, so there's always a combination of, in any business, but 40% of the cap table should, subsequent capital should come from them or within their network. If you haven't built it that way, then you'll hit a wall. I think rest of the 60%, they might have a number and they'll put it in once, and they might not have the capital to top up, but it's okay. They understand that though they'll be diluted. The multiplier, if you are on the right ventures, which we are going long, will still be far more than you will get across your traditional investments.
I understand. Oh yeah, absolutely. You keep talking about the UK, and I'm conscious that when people talk about startup and investment, they tend to think of London. And having read a little bit about your background and your approach, I do believe that you don't necessarily focus on London. You think of the rest of the UK. So give us some examples of experiences that you've had in terms of both startups and also capital in other parts of the UK.
So I'll give an example where, so if you see the tier 1 and tier 2 cities, and I'll go to India and the UK. See, and not generally tier 2 to tier 4 cities. See, good entrepreneurs and good ideas can come from anywhere. Yeah.
Yes.
We've typically seen that usually people in tier 2 to tier 6 cities are trying to solve real problems. Yeah. And they're, because they're a little removed from that fad and the energy, right? They're trying to see what are people there trying to fix.
Mm-hmm.
And those are, in most cases, real world problems. I think we've seen that, again, without brandizing or again, without prejudice. See, in metros, there is a lot of energy. You're just inspired by people who are trying to create, flip, move on. And it is trying to cater to an audience which possibly at times suffers from the ADHD, right? They need to change an app every 3 months, 4 months, 5 months. They already have, people, and I'll give an example of India, for instance, 1.4 billion people. 400 million are quite saturated, very smart, very savvy, have 4 food apps. And we are trying to say, well, the 5th one is going to be amazing. Yeah. Whereas the 1 billion in India, right, tier 2 to tier 6 cities, those people, they don't have many people reaching them because many people don't understand what they're after. Mm-hmm. They are after better security, food, modernization, upliftment, wealth creation. Yeah. And whoever can service that need, people will grab it with both hands. Yeah, because it's a true purpose you're trying to solve. And same we've seen across the UK, especially leveling up strategy. We've been working on this across Manchester, Birmingham,
yes,
Scotland. Mm-hmm. Leveling up has been great. We did a collaboration with GC Angels across Manchester as one example. Manchester, India, is again another example. A lot of great mind, a lot of great effort is being put in. Cardiff is putting a lot of effort. Wales, Ireland, generally to nurture entrepreneurship. Costs are lower, but great ideas can come from anywhere. So for us, it is immaterial where you are from. It is important that we find the best entrepreneurs and ideas that are going to service the impact audiences globally. 1 billion in India, and out of the global 8 billion population, 6 billion is that impact audience. So whatever will work in one emerging market, 80-20, 80% it will work in other emerging markets. Mm-hmm. That is what we're after. Whoever is solving a true problem, and we can anticipate that because we know many emerging markets globally and how they operate.
Mm-hmm. But you touch on something very interesting. It's culture.
Mm-hmm. Yeah.
Culture is very, very important. Obviously you've got the culture of the Anglo-Saxon culture, the Indian culture, and the other emerging market cultures. And how does that sort of tie in with spiritual economics? So, see, culturally, if you go back, you can see, we hear about a lot of the collectives, right? And we hear about a lot of charity initiatives. Many, if you forget those who are just trying to do it for media purposes, right? A lot of people, philanthropy is a true stage where typically people hit that once they've done in the point of soul searching, they've done stuff, made money and created wealth, and then they realize that it's not fulfilling. Maybe things they need to be redone. And it is a longer term journey where they then start to invest in charity, start talking about what is the right way. And culturally, if you see, Europe, collective, UK has been a very strong collective, collective of people who've always look out for each other. Yeah, as opposed to different emerging markets where you see that people are, it's not a me and you, it's a me versus you scenario. Yeah. And that to me is spiritual economics, in interjection, where what we are saying is, see, we can prosper far better together than us on our own. Yeah. And especially culture now, we are at that beautiful juncture where, if you see South America, for instance, yeah. Now, if you do India, if you see Africa, other ASEAN markets, many, they've had a perception of a lot of corruption in these markets. Yeah. A lot of crime. And the startup wave is coming. Yeah. And these young businesses, or, startup, I mean, early stage businesses, MSME or otherwise, who
And this next generation is very keen to do things the right way. They're actually pretty honorable as a class. Now, if through spiritual economics we can guide them on how to be selfless in terms of helping everyone around the impact audiences, but also teach these entrepreneurs how to selflessly create a very positive environment within the organization. That ethos will ripple. Then egoless. Ego is the biggest negative energy. It rattles people. And that is where you see clashes and all these things. If you're egoless and if you are becoming a collective, if you are humble and you actually ask for help, trust me, people who with the most ego will come down, right? And this creates you create that ecosystem in your organization, people around you is positive. And if you are egoless and fearless, just be if you're egoless and selfless, then you have nothing to be scared of. You can go fearlessly, spread the positive energy, and trust me, you will, your business will get so much growth. You will just not, understand how are you growing so fast. Because to a journey to be a global giant, see, we are only interested in creating global giants. A business for a 10 million end goal or 100 million or a billion or 10 billion is very different stages.
Yeah.
If you want to be a global giant, you have to have this ethos so that destiny can support, you in really pushing up that fast. This is where you get true impact. Otherwise, you'll be fighting with each other and, it'll consume so much of your bandwidth. It's not worth it. Yeah. And people around you create that energy. If we're talking to, different families across South America, for instance. And this is the kind of ethos we want to bring. That layer of startup entrepreneurs who are coming in now, the right values and who they hire, they nurture, who they partner with, who they invest with. In the next 3 to 4 to 5 to 6 years, we can truly impact the global landscape in a very positive way.
Yes. This is very interesting. In terms of, you talk about the number of, you started 12 years ago, you started investing in companies, your portfolio is worth what, $2 to $2.5 billion dollars, I would understand. Can you estimate how many investments have been made and to achieve that 2.3, and how much capital was used to deploy in order to get to the 2.3?
Yes. So again, see, we have last year we made around 40 investments, and a couple of businesses very, very quickly are already being valued at $1 billion plus, and we came in at early stages within the same year. But if you see, it's not, of course, destiny plays a part, but they were very strategically prepared, because when they were earlier in their journey, what we invited the right strategic investors to participate in the early journey. These are investors who will typically put in 50, 100 million or 200 million tickets. Yeah. But these are also people who are legends in each country. They're positive and they're legends in each country. Yeah. Now, the biggest risk that we try and mitigate is geopolitical risk. You might be an amazing, fast-rising startup or a venture in a country, but if one of the top families of that country gets up and says, I'm going to do this tomorrow, you're gone. Right? And the more you run after money, the harder it, the more it runs away from you. Yeah. So what we are all about is, from how we have created businesses is, when we back someone, we're already bringing in people from South America, from Africa, from other parts of Asia, Middle East, Europe and others. These are the people who we trust. We know these investors are good. They come onto the cap table early with a view that they can guide the entrepreneurs to be geopolitically safe. Because if I launch them in 7 to 8 countries over the next 5 years, right, I know where the capital is going to come from. And I know the local muscle is also essential to make sure you can grow in your journey. Right? That influence is essential. But if I'm launching someone in 5 countries or 8 countries over the next 5 years, I'm only expecting them to be successful in 2 or 3 or 4. If they are 2 or 3 or 4, they are already, on track to be global giants.
Yes.
So the reason, and it is not the number of investments it took. I think it is a factor of how we created these time and again, which is why the moment we've come at a pre-Series A stage or Series A, we immediately are talking to a lot of the big boys while we put in $1 million or a couple of million, right? And we followed up in the next round again with $1 million or a couple of million. We're already immediately having conversations on the 200 million tickets that need to come in the next 12 months.
I understand. How do you manage with our experience and knowledge, when you look at startups and you look at investors who are coming on board, particularly with startups, you get, your seed investors, some of them get a board seat or whatever. But then you watch a startup struggle with, I want to spend time at the coalface building my business and the idea and the market, etc. But I'm spending a lot of time in the boardroom dealing with investors. How do you strike that balance? How do you avoid?
Again, I think it's a factor of, this is the entrepreneur. You can put a layer on them or under them, right?
Yes.
So our approach is very simple, that we don't take board positions. We prefer to take board observer positions. If you need to be there to monitor, then it's the wrong horse you bet on, right? Essentially. I think, and if you make sure that there are enough good people, advisors who have invested in the venture as well, as I said, around the entrepreneur, and we keep guiding them, they do well. The reason we come in, and if you see that the entrepreneur journey to exactly that point, is that it's an ongoing, fundraising is a time-consuming task. It is an ongoing journey, right? Now, a founder can either grow the business, which they're really good at, or just do fundraise, right? They can't do both. You can't be a solid banker, investment banker, and it's a very rare mix. Yeah. Now, this is where we come in, and typically, if you see, the journey is pretty fragmented. There are a lot of good people across the chain, but an entrepreneur first has to deal with someone at a seed level, whose capability is only to bring in seed capital. Then they deal with someone whose capability is typically only to bring in pre-series or Series A money, because that is their horizon. See, then just someone who will help with BC, then someone who will only come in at a D or 100 million plus, then someone at an IPO. Now they have to find a lot of people. Now what happens is that, exactly to your point, we've seen why startups have failed is because a lot of these people across the journey, they're good people, but they are dependent on those transactions closing for their survival and their lifestyle maintenance, right? And in many cases, they will just bring, because they're not strategic till the end, they'll bring any kind of capital for the founder. Now the founders then get introduced to many times a lot of negative energy, people who will poke the hell out of them, right? Exactly, those investor meetings, minor details, they're immaterial. If the business is growing well and you have everything in place and you have good visibility and you are supporting and nurturing them, this is where spiritual economic comes into play. When you've invested in someone, you're not investing with doubt. Don't invest. You're investing with full trust and support. While support and you are guiding, you're making sure that the person is on the right track. You have continuous positive monitoring, right? That is where an observer is enough, essentially, right? To guide and shape. Something wrong is happening, a red flag can be raised at any time, be you're a board member or a board observer, right? So what we try and do is, when we after we've demonstrated our success in the first round or couple of rounds, trust is built because we brought the best names on the cap table. From that point, we generally encourage founders to focus on the business while we line up subsequent capital, while we line up their global growth strategy, who they should partner with, who are good people, who will help them scale, who are the people that are going to come in to be able to safeguard them so that no one hurts them in their journey, right? How do you continue the PR, marketing activity? So we do all these things. So we try and remove them from the noise. Otherwise, the investment is as good as dead, in all honesty, right?
Absolutely, yes. So tell me a little bit about, obviously you started life in technology, and you've been involved in building businesses. But how much does technology play the part in terms of your management of the decision-making process? And also how many of your investments are very technology-based?
So I'll answer the second one first. I think technology is not a mandatory, but an important component, because global scalability, emerging markets, they are on a stage of upliftment. Even if his products or services, I think they're backed by some manufacturing engineering technology. So what is the USP? What is it? And this allows scalability as well. And so technology can be hard product or technology can be software. It can be either or. It's important because that gives the edge, that gives the innovation. Innovation is very, very key. Constant innovation. Right? So, I have around spiritual ecology, one constant that I've learned is consciousness is constantly trying to evolve to a better state. That is what innovation needs to be done in any organization, needs to be constantly striving for better and better and better. Right? So it plays a very important role, and that approach, I think, with regards to what we, for us is important, the business has the agility to be able to scale across different countries, but we've been meeting that through emerging markets focus. Because if they are serving that, and if they are something that people will grab with both hands, that is the business that we want to back, because we know that it'll fly across many emerging markets.
Yes. I mean, from your perspective, you have a great ambitions. You want to grow the business from where you are, 2.3 billion to, I heard recently, over 100 billion of investments over the next few years across all emerging markets. But you're going to need technology to do that. As much as there's this ethos of people and people doing business with other people, and it's very much a people business, you need to have an environment or a platform where that level of communication, collaboration, support, advice can be delivered more efficiently, more effectively, and within the ecosystem that you've put in place. So what steps have you put in place in order to scale your business?
Absolutely. And I think that is spot on. So we have, I will break it down to, we have a CRM, amongst the best globally, which is an end-to-end suite where, we manage investor, startup, details, progress, track to the granular detail. Analytics behind it, are pretty good. We put our own layers on top of it. Then when it goes down to, people investments, there's a platform again that we've kind of brought in place so more people can engage better with it. Information is visible. Again, I think with regards to, we are looking at a lot of technologies which can further help our portfolio with better PR, better video creation, essentially, better information sharing, a central repository. All these things are pretty natural, I think. But the risk, I'll tell you again, the risk is that till you will know in your heart with that technology. Like for the CRM, we know we found our home, and we had to, you have to kiss a lot of frogs, right, to find the right outcome, and we did. And I think eventually we settled on a CRM which we feel it is it.
Yes.
And they're on a good innovation stage. I think for a lot of other things, as we go into, for instance, South America, we are looking to launch our offices across Colombia, Nigeria, Vietnam, Switzerland, Singapore, UAE, and Israel over the next 12 months.
All right. Yes.
And so audiences are very different.
Yes.
Yeah, local ecosystems are very different. So wherever country we go into, there are going to be some dominant ecosystem technologies where people collaborate. So, and we know, we have sight of, we've been doing research for the last 2-3 years. So where we go, we will plug in to each of the, and each country has 2 or 3, in all honesty.
Yes.
So we'll continue to plug ourselves in so that our mechanism of distribution is there. But to be able to scale, I'll again say, you can put in the best metrics, best analysis, DD, this, that. What you can't automate are 2 things. You can't automate relationships.
Yes.
And you can't automate instinct. Right? We are, and it is whatever people say they've done their due diligence. They love a deal. The only thing is they want to sense that they your instinct is also saying the right thing.
Yes.
And that's it. So for us, 80% you can automate. There's 20%, which is the core. It is all about people connecting with people.
Absolutely. Now, the reason I asked the question is it's we, as you know, we are on the path of building on trade corridors between India and the UK and Turkey and the UK, etc., and other countries. And we use technology quite significantly to create that trust layer that, without doubt, that the person you're dealing with is a real person, a real company. And it's only through technology that you can do that. It doesn't replace that level of interpersonal relationships that you were talking about and that trust building. It doesn't replace that. It just creates a foundation and a basis for honest communication, which I think is very, very important in building our platforms. And what you're doing is fascinating. And compared to many, I've seen many startup platforms, many platforms that, well-known ones, that it's a pay-to-play model.
Yeah.
Yes, you go through the whole DD process. They love what you're doing, and they're going to say, yes, we'll take some equity or not, and and we'll introduce you to our investors, but you've got to give us X thousand pounds. And for a startup, that is a lot of money, because £10,000 or 5,000 or even £2,000 at the time is a lot of money. I can get a lot of bang for £2,000 in just a Google ad spend, for example, even though it may not be relevant at the time, but to talk about it. But the key thing is you get more bang for your buck, rather than pay £2,000, £5,000, £10,000 and commit us to a 3-month program or 6-month program and maybe have to go to Amsterdam to do it and And suddenly you'll be introduced to X amount of investors, mentors, And what happens after 6 months? Nothing. You made a lot of contacts, but you still haven't got the investment. So it's a lot of opportunity cost that goes out the window. So it's very difficult for startups to trust these ecosystems.
There you go. Yeah, and absolutely, you've nailed it in the end. I think, see, the whole concept of, and it is the reason why spiritual economics is the way we should build these businesses, is because, see, it's a fact, and it's a known fact that in any business space, the 100 people you meet, 95% people are going to be time wasters, right? So there is nothing we can do about it. Yeah, but unfortunately, these are people who you want to weed out, and I think the founders are doing it generally from a perspective that they want to meet serious people. That's why, where they get the impression. But also the platform, the reason they charge it is because they've also had a lot of time wasters, who don't come through. And I think it's lack of trust, right? So I think it is that trust which needs to be sorted to be able to, for people to progress forward.
I've really, really enjoyed our time together. I know we come into the top of the hour and we said we would only spend an hour with you. I want to spend many more hours talking.
I know. I would love that.
I'll arrange some more time, and I'd like to discuss more enlightening aspects of spiritual economics and your startup ecosystem and investment platform. But I want our listeners and viewers to know a little about you. How do they get in touch with you? Are you very active on social media? What's the best way so people can get hold of you?
So again, our website jpin.co, is there. I'm very, very happy. I'm very active on LinkedIn. People can reach out. My details are there. Generally, I'm very, very happy for you to share my details. In the post. Absolutely, we are here to help. So, the more people we help with spiritual economics, the better we'll create global giants together.
Yeah.
So it's a positive thing that we all need to do together.
Gaurav, thank you very much for your time. I really, really appreciated the time you've spent today, because I know time is important to you. But in building a bridge between investment, startups, and creating a better world, I thank you very much indeed for your time.
Thank you so much, Hilton.
Thank you.
It's so good that I think that conversation was naturally flowing on spiritual economics. So I would love to have a more detailed. I think we can do so much good for the time, or for the world.
Wishing you and your family and all your employees and all the people that you've invested in great happiness for the future. Thank you.
Thank you so much. Thank you.
Thank you for watching this interview podcast. If you are interested in knowing more about Citiesabc.com with openbusinesscouncil.org and fashionabc.org, go to our platforms, as well as you can find me on social media and DM me on Twitter, LinkedIn, and Instagram. And do go to the other interviews we have done on YouTube. And don't forget to like or comment. Thank you very much for your time and engaging with this interview on Citiesabc.